What was your hardship in 2020? Maybe you lost your job, your business went down, your hours at work were cut, maybe a sickness, separation, divorce, or unfortunately, a death in the family. All of those are reasons that you might want to list in your loan modification hardship letter. It's really important to understand that when you apply for loan modification, you're going to have to explain to the bank why it is that they should give you a loan modification. I'm going to teach you how to write a good hardship letter, what to avoid, and how best to try to apply for loan modification so they can lower your payments and maybe help you keep your home. Hi, my name is Diego Mendez. I'm a loan modification, bankruptcy, and debt lawyer here in Miami, Florida. I was around in 2008 and I helped thousands and thousands of people with loan modification, foreclosure issues, and bankruptcy issues throughout the years. I've assisted people in writing thousands of hardship letters and applications for loan modifications in hopes of getting them a lower payment so they can keep your home. In order for you to understand the loan modification process, you should first understand that the banks require something called a hardship. This is called the hardship requirement. The hardship requirement basically is that a bank requires that you show them why it is that they should give you a loan modification. They're going to ask you to write a statement to explain to them what happened in your life that caused you to get to this point where you're asking for a loan modification. Now, the means for them to do this is something called the hardship letter. Now, the hardship letter terrorizes people. This is something that a lot of people don't like to do. A lot of us have never written a letter. Maybe since high school or college, we haven't written something down in this form. People start freaking out about what it is that they're going to have to put in the hardship letter to get a loan modification. I'm going to explain to you what to do, how to write this letter. It's not as scary as it sounds. It is something you're going to have to do, and there is a right and a wrong way to do it. I've done thousands of these with clients, and I can tell you that there is a technique and something you're going to have to learn how to do pretty easily. If you listen to this video, I'll teach you how to do it, and you're going to be very successful, at least in this portion of the loan modification application. So let's talk about that. What is a hardship? You have to understand that what you're asking for when you're applying for loan modification is very special treatment. Imagine this. Imagine going to any other type of creditor and saying, I can't pay you, now what can we do? What can we work out? Because the house is the collateral for the mortgage, the bank is very, very willing to work with you because they understand that if you can't pay it, well, they're gonna be able to foreclose and get their collateral. So they're willing to risk doing a little payment plan with you, modifying your loan, because they understand that in the end, if you really can't pay, they're going to be able to get their house back. In order for you to successfully get a loan modification, you're going to have to understand what a hardship is so that you can put this in your letter. Now, the one thing I want to tell you right now, before we get into it, you need to be honest. Don't make things up here, okay? It is not the time to imagine some hardship that doesn't exist. Trust me, they're very liberal in terms of what they consider a hardship. But if you lie to them and make something up or make it worse than what it actually is, that could backfire. There is a human being reading these hardship letters. This is the only part of the application where a human being actually weighs in and makes a decision. They do have certain guidelines, the banks, when they're considering what the hardship is and what it isn't. So you need to understand that whatever you put in this hardship letter can be used against you or for you. So let's make sure that we write something that's going to help you. It's not going to hurt you. Now, these are some of the reasons that I've seen, and they're pretty simple, but you need to understand this so that you can fit your hardship into one of these. Loss of employment. If you lost your job in 2020 because of COVID, it's really important to talk about that in your hardship letter. It's very simple. I lost my job, therefore I was unable to make the payments for a short period of time, and now I'm able to make payments because I have new employment. That could also be the loss of the job of a spouse or a contributor, somebody that helped you pay. It's the same thing with if you had a small business. Your business went down, you weren't able to make the payments because it caused your income to be reduced because your business wasn't making as much money. Those things are also reasons why you need to put in your loan modification hardship letter that you're now even though your business went down, you're now making a little bit more money, and now you can pay you can pay a loan modification payment. Illness, obviously tie it to the loss of income. If you were ill and you were unable to work for a period of time, that's the reason why you weren't able to work. You want to list that, especially if it's COVID. You want to put that it was a COVID-related illness, and that you were out of work for a little while, and now you're working again. It's also if you're one of your spouse, or if your contributor is also somebody that was sick, you want to put that in there. They were sick and now they're working again, or you were able to pick up more hours and now you're making more money, so now you can come up with a difference, that the reason why you stopped paying. Divorce, that's self-explanatory. Where there was two incomes, now there's one, or child support and alimony is replaced by income. Income is replaced by child support and alimony, or now you have to pay child support and alimony. Those things are causes for for hardship, and maybe the bank will take that into account when they're looking at your application. The last is the death of a spouse or death of a contributor. If somebody died in your household and now you're unable to make the payments because of that loss of income, you want to tell the bank that. This is really important. Again, these people are human, so they will look at that, and if all the other factors are in place, you're very likely to get a loan modification if things are your income and other reasons for them to give you a loan modification are in place. If you had a death, obviously they're going to look at that and they're going to consider that a very serious reason and for your hardship. This is really important. Again, you want to be very honest with all this stuff. All of this stuff can be proven. So you don't want to make things up. Don't lie. We're going to talk about things not to put in the hardship letter in a second, but I want to be very clear with you. Do not lie on this application. If the bank catches you lying, they're not going to do anything to you other than deny you. And then whenever you apply again, they're going to look back and say, well, she lied or he lied before, so why is he not lying now? No reason to lie. I'm sure there's one of these reasons or some other reason specific to your situation that we can talk about, but I'm sure they fit in some sort of, at least the loss of income portion of this. So stick to the truth, stick to that, and you should be okay. Now, what is not a hardship? This is really important. You need to understand that not everything in life they consider a hardship. What you might consider a hardship is not something that the bank, for the purpose of loan modification, because there's a hardship, therefore they're not going to help you. Do not list these things that we're going to go over right now. Again, what is not a hardship also is lying, which we explained before. If you lie on your application, then they're going to deny you, and you're not going to ever get a loan modification. So, what is not a hardship? Retirement. Retirement by itself, which is this part here, this is a loan, is not a hardship. The bank doesn't consider because you retired that even though you'll have a lower income, that by itself is a reason sufficient to give you a loan modification. Now, if your retirement causes you to have less income, then there's your hardship. And so you have to frame it in that way. Don't talk so much about your retirement, but talk about that your income is lower because of your retirement. It also changes the factors. They treat SSI income differently, so that's also another reason why you don't want to put necessarily that you're retired. You just want to say that your income was lower because you're retired. But don't say only because you're retired. It's a small difference, but it's important so you don't confuse the bank and you make a application that the bank can actually understand. The second here is the desire to lower your interest rate. Now, we're seeing beautiful interest rates now, less than 3%. Everybody wants these interest rates. I'm sure that if you are watching this video, you first made an attempt to refinance your mortgage. Maybe that was unsuccessful because your credit wasn't very good or other reasons. Remember, if you're in a forbearance right now, you have to come out of the forbearance in order to apply for loan. If you're in a forbearance right now, you're going to have to come out of the forbearance in order to apply for a refinance. So you can't apply for a refinance while you're in forbearance. You probably already know that. You've already tried it, and they've denied you. So that's why you're looking into loan modification. Now, if you put in the hardship letter that what you want is a lower interest rate, they're going to deny you. That's not a hardship for them. Your interest rate is something you agreed to when you bought the house 10 years ago or 5 years ago or 25 years ago, whenever it is that you bought the house. That was the interest rate. What you agreed to is what it is. If now the interest rate's less, they might be able to give you a lower interest rate by manipulating the loan through a loan modification, but you can't put in the letter that what you want is a lower interest rate, because that's not a hardship. You have to have lower income because of something else that happened in your life. If you're making the same amount of money you were before COVID, and now you're making, and now you continue to make the same amount of money, and the only thing you're looking at is to get a better deal on your mortgage, the bank's going to deny you. So be very careful with this. Don't put that. They'll just deny you if you're wasting your time. The other thing is, and some people put this, and I'm not sure why, but they just stopped paying their mortgage because they didn't want to pay. Now, that's the same thing with the forbearance. A lot of people who could have paid on their mortgage decided that they could take the break and not pay. Now, the bank's going to see that your income's the same. If your income didn't change because of COVID and you had the same income prior to your forbearance, during your forbearance, and after your forbearance, the bank's going to say, well, these people just decided to take a forbearance just to take a break. And if you put that in your loan modification hardship letter that you didn't want to pay for a while, obviously the bank's going to deny you because that's not a hardship. Now, the bank can actually read into that anyway, so you might not even have to put that. If you're one of the people that took a forbearance just to take a forbearance, you're going to have a really hard time proving hardship when it comes time to write the letter and all the other documentation that you have. Now, the last thing, something called a strategic default. Now, a strategic default is something that was a big thing in 2008, 10, 9, 10, 11, during the last recession. A lot of people, what they were doing is, in order to trigger a loan modification, they were strategically defaulting on their mortgage payments. What that meant is that they decided that on their own, they would just stop paying in order to force the bank to modify their loan. I don't recommend doing this, and I definitely don't recommend telling the bank you're doing this. You cannot tell the bank, well, the reason that I'm not paying is because I want a loan modification, which they consider a strategic default. That is not the way to do this. If you tell the bank that, they're going to deny you because that's not a hardship. In order for you to get the strategic default, the benefits of a default like this, there has to be something else. There has to be a loss of income. There has to be some other reason why you decided not to pay. It's a real hardship. This hardship letter seems like a simple thing. It seems like something that you can just blow off because, it's just a simple statement. It's at the end of the application. But you have to understand that you shouldn't blow it off, because this is the only time that human beings are looking at your application and reading something that you wrote or that somebody helped you write, that tells them what it is that's going on in your life, that allows them to say, okay, this person deserves a loan modification. It's not, you can't convince a bank with a hardship letter to give you a loan modification. It's not some sort of request that you can say, well, you should give it to me because of X, Y. You're just explaining to them in your own words what happened in your life that caused you to get to this point. This is a really important part. Now, it is a scary process. A lot of people, like I said, haven't written a letter or haven't written anything substantive in many, many years. But if you sit down and you really think about these points, you can write a letter. You can write a statement. They call it a letter, but it's really just a statement. It could just be bullet points. It could just be a short few sentences. But remember, it needs to be consistent with your reality. If you have a loss of income, put that you have a loss of income, and you're going to show that with your paperwork that you submit, your proof of income and all the other things. But if you can't prove what you're saying in the hardship letter because it's not real, the bank's going to deny you. Now, I hope this helps. I hope that when you're applying for your loan modification, you think about these things when you're doing your hardship letter. It's a really important step. Don't just blow it off. Don't just write whatever. Be a little cognizant. Be a little bit caring about this portion of your application because it is really important. Again, my name is Diego Mendez. I'm a bankruptcy loan modification and debt lawyer here in Miami, Florida. I've been doing this for at least 12 years. I've helped thousands and thousands of people with their loan modification and foreclosure and real estate issues throughout the years. I was around in 2008. I helped a lot of people at that time, and I'm still doing the same thing from that time period now. Please subscribe to my channel and like my videos so I keep making videos so I can keep helping people like you save their homes and get lower payments and get on with their lives. Again, thank you very much and have a great 2021.